Hi everyone, welcome to today's video. So today I wrote a thread on Twitter which went viral, and the thread was about that how governments are taxing the middle class and making the richer rich. That is what the concept of today's video is. I will explain you two things. One, why is it that the middle class is getting poorer by the day? Second, what is it that you can do to avoid this situation? So super important to understand the macros. I will teach it in a very easy to understand language. So please listen to this concept very, very carefully because it helps you encapsulate what is going on in the world at a macro level. Two, three very important points. One, when I say middle class or rich class, it does not mean the standard definition that has been given by the Indian government. Because I'm talking about middle class and rich class, that encompasses the world. Second key thing that Akshat, you yourself might be in top 1%. So first and foremost, thank you so much for thinking me so highly. I might be, I'm not denying that. But the bottom line is that I'm not a type of a person who has built debt-oriented businesses, which many billionaires and multimillionaires have done. So I'm not in that category. I build like simple digital businesses. So this strategy does not necessarily apply to me. So when I say rich here, please contextualize it for people who are running Fortune 500 companies. Now, these concepts have also been talked quite extensively by Ray Dalio. So I just completed reading his book called as Principles. It's a wonderful book, but a very thick book. Ray Dalio writes really thick books. And there is another book that he has written. It is called as The Changing World Order. Again, it's a super thick book. You can consider listening to the summary of that book on Kuku FM. I will put the links in the description box. So let's get the video started. Very, very briefly, what I'm going to explain on this video is my Twitter thread in very easy to understand language. So let me take you to Twitter and start explaining things. So we are living in very interesting times where the governments are helping the rich get richer by taxing the middle class. Let's understand how, and let me present you some data and facts to back it up. First and foremost, if you look at this particular chart on the left hand side, you will see the comparison between bottom 99% and top 1%. Now, this situation has changed quite aggressively from 2008 onwards. And what happened in 2008? In 2008, the first major leg of quantitative easing took place. That is when the Keynesian economics came into the picture and government started printing money like crazy. For every problem now, they go and print more and more and more money. So this over time, this money printing is what? It is essentially a debt. Now this debt is being paid by whom? My argument is that this debt is being paid by middle class, and whom is it benefiting? It is benefiting the rich. So that is what I'm going to show you now. But important point to pick from this particular graph is very simple, that post 2008, the rich are getting richer systematically and the poor people, or the bottom 99% people, are getting poorer. So the macroeconomic argument that explains this theory is fairly simple, that if you take a look at this picture, it encapsulates the spirit that every time there is any problem in the world, government solution is print more money. 2008 crisis hit, print more money. Oil crisis hit, print more money. 2016 US-China trade war played out, print more money. 2020 COVID situation hit, print more money. There is a reason why people have started trusting cryptocurrencies or bitcoins more, because of this systematic issue in the current monetary existing system. Otherwise, people are not crazy to look for alternate to established currencies, so to say. But anyways, this does not capture the entire viewpoint of cryptocurrencies. We'll do a separate video there. Anyways, I hope that you get the picture that, okay, there is some systematic issue at play because of which the rich are getting richer and the poorer are getting poorer. Now you might say, Akshat, okay, fine, you have been ranting about this money printing thing. So what does this typically lead to? Okay, so printing leads to, typically speaking, more inflation. As you are seeing now that in the US, the primary topic of discussion right now is high inflation. Why? Because in 2020, the US government went bonkers and started printing money like a crazy person. So this leads to high inflation. Now, inflation, as I had explained on several of my previous video, is a political issue. Because if pyaz tomato rates are going up, then people demand answers. They can't forever keep on paying high prices. And one of the most effective ways of fighting inflation is what? It is to accelerate growth. That is very, very important, because if the inflation is really high and the growth also stagnates or a recession comes, then it's a big, big mess for the government. So how is it that the government accelerates growth? So government these days is trying to accelerate growth by supporting big businesses. For example, they will give tax rebates. They will offer low debt, that go build factories. We will support you. We will offer you like 0% interest rate. We will issue a BNPL card for you, this, that. Okay, so they don't issue BNPL card, but they end up offering super low interest rate to super rich people. Now you would say that, okay, Akshat, this sounds like a great economic principle, that if the entire environment is negative, Government comes out, support businesses. What is wrong with that? Yes, I agree. And so far, the story is not toxic. Toxicity develops, and this has been encapsulated by a quote that was written by Elizabeth Warren today. Elizabeth Warren is a US senator, and she is very active in US politics. So let me take you through her quote as to what is happening. So basically, she said that giant corporations are making record profits by increasing prices, and CEOs are helping drive more and more inflation. American families pay higher prices, and corporate executives get fatter bonuses. This is the important part, and this is something that you need to understand more. So let me first help you break down the thread that was written by Elizabeth Warren. So if you take a look at some of the CEOs, what are they saying? So Tyson Food, it's a very big company in the US. We are asking consumers to pay for inflation. This is what the CEO has said. But Tyson just didn't pass on the higher cost. It more than doubled its first quarter profits. This is point one. Let me take you to 2-3 more companies. Kroger, again, is a very big company. They are saying a little bit of inflation is always good in our business. So all these big CEOs are actually supporting inflation, and they are cheering for inflation. And I'll explain you the reason also. Then you take a look at Procter & Gamble. Pricing has been a positive contributor to our top line. This is again a very important point. And what has P&G done? P&G already increased prices on baby care, detergent, dry sheets, hair care, oral care, this, that, whatever, right? So now you'll say that, okay, Akshat, got the argument that, okay, top CEOs are cheering inflation. Why is that? Now the explanation, I'm oversimplifying here, and there are two parts to it. So one is that during a high inflationary environment, big companies, for example, you might have seen that HUL, Procter & Gamble, all these companies have increased their product prices. Why? Because they can. They can willy-nilly increase the product prices because it becomes a justifiable issue. All the top executives have to say is that, see, there is high inflation in the economy. Our supply chain is charging us more. For example, to make a bottle of shampoo, we have to pay higher prices on all the chemicals. Therefore, we are increasing our product prices. So the government cannot intervene, and it looks like a very innocent move. But here is the dance that is going on, and this is something that you need to understand a little bit more fundamentally. So let's say that due to bad situation, 1,000 units of new currency was printed. Now, technically, what should have happened? That this 1,000 unit of new money that has been printed in the economy, it should flow to all the sections of the society equally, or at least proportionally, right? But what ends up happening is that if these top CEOs start increasing the prices of everything and start making more and more profit margins, then what is typically happening? This new money that has been printed, it goes to these rich people. The more money their companies make, the more salaries also that they can command. So this is the dance that is going on behind the curtain, and it is very important for you to understand. Now you'll say, Akshat, you know what? I don't completely buy this argument, because if more money is printed, even I will end up getting more money. And your understanding is 100% correct. But what you need to understand is that what proportion of the money is flowing to you in terms of increased salaries. For example, if 1,000 units of currencies are printed, but your salary does not goes up proportionally at the rate at which this currency is being printed, then it's a bad move. So I had to pull out a lot of data, and this is what I could find. So when more money is printed, even the middle class salaries should go up. But unfortunately, this is not happening. If you take a look at this particular chart, you will clearly see this is the year 2015. And since then, there is a downward trending curve in terms of the percentage growth of salaries. And where is this salary slowing down? It is slowing down for everyone except for the top 1%. Does that apply to India also? Yes, it does. And let me show you some data. And this is not a personal attack on all the names that I'm showing you. I'm just trying to help you understand a broad macro picture. Now, here is the CEO salary rise in India. So you can take a look at the name of the company, the CEO, and percentage change in salary, right? And look at the percentage change. It is more than the least percentage change that has happened is 38-39%. Now tell me in the comment box that how much has your salary gone up by post-COVID? I can almost guarantee that almost 80-90% of the people commenting, their salary would not have gone up by more than 10-15% if they would have continued to stay in their own organization. In fact, a large number of organizations would have said that, hey, you know what, COVID situation, we can't even increase your salary. So let me know if this was true. So if we analyze the problem, this is what we can quickly summarize, that more quantitative easing leads to more inflation. Middle class covers this to high taxation on the one hand, because the government, in order to stabilize this quantitative easing, they are going to charge more taxes, and the middle class or salaried people are going to pay the most of these taxes. So they pay through higher increased taxes, and they also pay through high inflation, which reflects in the form of pricing. And all the additional benefits that have been given by the government has been given to whom? It's been given to businesses, not to salaried middle class people. Now comes the question that what is it that you can do to avoid this situation? Is there anything that you can do? Now there are 3 solutions that I can tell you. Are they all good? No, but I can at least point you in the right direction. So first and foremost, you should invest where rich people are investing. So just look at where rich people are investing. They are investing in stocks. They are investing in cryptos and whatever else assets. Because if I say cryptos, a lot of people will start creating hoopla. So the word of the day today is hoopla. Let me know what that means. Just figure out where rich people are investing, invest your money. If you are taking positions in good assets, automatically your money will grow too with rich people's money. A classic case in point is the 2020 COVID crisis, that if you would have kept your money in fixed deposits in a high inflationary rate environment, your money would have gotten eaten up. So 100 rupees kept in fixed deposit would have become 96 rupees now in real terms. On the flip side, if you would have invested in stocks, you would have been sitting on huge gains, provided you would have picked stocks correctly. This brings me to the second point, that what else can I do? So you should look to start businesses. If you can start some debt-oriented businesses, I generally speak typically against debt, but to complete your education or start a new business which requires debt, debt is not bad. And if there is a way for you to benefit from these government-oriented schemes, then definitely take loans, start a business, no problem, and try to get into the business world if that is a possibility for you. Third option is please switch around. This is something that you can definitely consider doing in an environment where we currently are. Right now, the job market is peaking. Peaking means that the unemployment rate is low and it's a great market for job seekers. So if your current employer is not giving you high salaries, or if they are being unreasonable with your salary growth, do go out and shop around. Figure out new jobs, interview with people, and see how much salary you can command. Now, this is not a diktat for me to say that, just leave your job and, start a revolution. Nothing like that. I'm just simply telling you that when the job market is great, you must also go and shop around, because the rich people are trying everything in their power to stay rich. So should you. And you should also look out for your own interest intelligently, rationally, and in a sensible manner. I hope you enjoyed the video. Press the like button and I will see you tomorrow.